Entrepreneurs that went between after World War II until the 90s are leaving the space to the new generation that has been living basically out of the new economy and digital world.
Now, what are the current corporate management trends that we're seeing in the SME environment?
So, you have the typical cycles of the economy, cycles of business trends and so on. So it's always like this, it has always been like that. Today there is a new trend that is bringing the typical asset-light way of managing companies that was typical of the digital economy. So digital commerce, e-commerces, for example, is coming to other sectors like brick and mortar, retail.
And what kind of sectors do we see like that?
Yeah. As I said, we do not have experience of all the sectors, but in the sectors we see, for example, retail, we see a trend in keeping as asset-light as possible, where, for example, the digital economy, e-commerce realized that it's not that easy to stay that light, so once in a while you need to be a little bit more asset-intensive, just a little bit.
And do you have any companies in mind that are following these trends?
Yes, we have some examples. We are working with Burger King in Italy, with one of the fastest growing developers. They have, for example, they start with intensive, asset intensive approach because of a need at the beginning of a company. Beginning of a company, you need to be followed by credit institutions and so on. So it's important to have a strong balance sheet. And the plan is always to keep a little bit light. So, for example, they invested in real estate at the beginning. They go for letting someone else invest in the real estate part. That, of course, improve the return on equity and the volatility of returns.
Absolutely. So that was Burger King following one trend. Are there any other companies following different trends, perhaps?
Absolutely. Also, in the same, it's what we call retail, meaning that sometimes it's food, but retail in that sense. We have a coffee chain. So we're talking about coffee capsule distributions. That is traditionally, by the way, was driven by online, and this company is starting from brick and mortar, so shops. And the idea is to keep a light cost per shop, a very light cost per shop. In the coffee business, you have good margins. And so trying to go in building in an, let's say, intermediate way. The opposite is happening in another company that we follow, that is a chain of ice cream shops. And in ice cream, also, it's a good margins, and of course, there is a seasonality, that you know, right? Yeah. And with all the implications, the important thing is you need to build a few shops in which you are owner of the whole thing, because you need to have a little bit of assets. And this is what happened with this company. They basically own just a handful of them. And then when they went for next step, they can multiply the number of shops in a franchise model. Of course, it's a completely different. It's much easier to go for asset light much quicker.
And it sounds like the risks are lower with these for these SME companies also.
It depends on the approach. The three examples we had basically show the typical classic relationship between volatility of returns and asset intensity that basically give you a little bit of the return on equity. So it's typical. The higher the return on equity, the higher the volatility of returns. And what's important is that these companies need to see two phases, like the startup and then the growth, or like the stabilization, or going for being mid caps. And this changes the risk profile.
So those are the trends. So how have these trends impacted the private equity investments?
It's a little bit coming back to the beginning of the interview here. It's a sector rotation in the sense that, first of all, there is a sector rotation in terms of behavior, and so a sector rotation in terms of how you are supposed to analyze the sector and understand the risk associated with it. So it is typical of the economy. Basically, there is some level of maturity that was brought by the venture capital in the past years, and the more traditional businesses are becoming more modern. There is also a rotation in, by the way, it's a rotation of, it's also generational rotation. So the fact that all the entrepreneurs that went between after World War II until the 90s are leaving the space to the new generation that has been living basically out of the new economy and digital world. So the management techniques are getting modern in that sense, and everything is changing a little bit.
Absolutely. Well, it sounds very interesting. So thank you so much for coming in today and sharing your insights with us.
Thank you.
Well, that's all from myself and Mirco, but for all the latest Ducoscopy updates and exclusive interviews, keep clicking back to Ducoscopy TV. Goodbye for now.